And we are live. Great to have you here. This is 76 Research. I hope you subscribe to this channel. I'm Trish Regan. I'm with my colleague, Rob Hordon, co-founder at 76. How's it going?
It's great. Great to see you again, Trish.
We got a couple people tuning in, which is wonderful news. You know, we have a lot going on, even though the market is technically closed for the Juneteenth holiday. It doesn't stop some smart investors from thinking about their portfolios on a day like today. And we've been watching, Rob, Nvidia just climb and climb and climb and climb. We got news, of course, this week that it has overtaken Microsoft as top dog, is the biggest company in the world, something like 3.3 trillion. Do I have that right? In market cap? I mean, wow, right? This is a massive behemoth. And it's like happened seemingly overnight, but not entirely. In fact, I encourage people to go back and look at last week's talk about Nvidia, because there's a lot to understand about the company and the company's founder, et cetera. Really amazing rags to riches kind of story. But as we watch this, I think it's just really incredible to look at tech overall, because a lot of people say, wait, can I still get in on Nvidia? Can I still get in on Microsoft or Apple or any of the others, right? Like there's Broadcom. There's a lot of big players in this space. And I know it's overwhelming for folks. Quick pitch to make sure that you're getting the resilience model portfolio that Rob and I put together. If you're looking to capture some of the growth and opportunity, there's a good 10 to 15 stocks in there, 76research.com. But Rob, like, how do you think about where to start if you are just getting into the tech sector right now with Nvidia at an all-time high?
Yep, great question. And it was just 10 days ago or so that we were marveling at the fact that Nvidia was the second most valuable company in the world. And it's actually up 12% since we had that conversation. So it continues to surge. I was a little bit skeptical that the stock split would really be that impactful, in that, you know, how much could small retail investors really move a 3 trillion market cap company? But
they showed you.
I think there's just a lot.
But what is okay? We can do the for and the against, right? Because I know you said last week before you start, look, this is still a really fascinating, opportune time to be getting into the AI space. Walk us through some of those metrics, because we can talk about the downside too. It's important everybody know all sides here. But what is this sort of positive case scenario? I mean, why is it that the investing community thinks that this is totally the future?
Yeah, it's just their data center revenues are growing like gangbusters. And I think people are, I mean, look, there's a lot of momentum here. There's a lot of people looking at this and saying, this shares are going up. I want a piece of the action. Yeah. But, this isn't one of these, late 90s pets.com situation. There's real earnings and cash flow and revenue growth supporting it. The real question, the $3.3 trillion question is, is it getting ahead of itself? Like, will that degree of revenue growth and earnings growth really materialize, or will it, and it's hard to judge, right? We're looking 3 years forward. The expectation at this point is that it's going to double. The actual customers who are paying Nvidia this revenue are actually their peers among the mega cap tech stocks. So you've got the Microsofts and Metas and Googles, are the ones
that
who
are really, in fact, I think we actually have a 76 chart on that. That it's good for people to see, because basically the entire sector, we should probably just say, right, the entire sector is on this upswing right now, and that's in part because of just everything that's going on. Really just incredible stuff to see. But, as we look at the overall sort of environment here, and Rob, can you see on your screen? I mean, we've got Apple, we've got Broadcom, you've got the S&P.
Yep. So you see the S&P in the gray line, marginally higher. This is over the last 30 days. So just about 9-10% higher, but you can see how it's really being lifted by these mega cap names. Nvidia up more than 50, close to 60% just in the last 30 days. Apple up 25% ish or more. Broadcom had which is actually a very large market cap stock itself, up nearly 40% in the semiconductor space. So I did some back of the envelope kind of math. I think that's about half the return in the S&P 500 just from these three stocks in the last 30 days. And Apple has had a big move, as you can see, with their announcement around Apple Intelligence that was well received, but has also invited some controversy or some criticism.
Mm-hmm. That's obviously the controversy, the criticism. Again, if you're just joining us, 76 Research. I'm here with my co-founder Rob Hordon, and we're talking about this AI rally that just seems pretty unstoppable right now. There's been some, the excitement around Apple Intelligence, certainly by the investing community, not necessarily by Elon Musk, and we can get to that in a second. But again, just staying on the theme here of what exactly people should be looking at. I mean, are there other opportunities that you think you think are really worthwhile within the tech sector?
Yeah, I think there will be there are clearly going to be a number of beneficiaries. Another stock that bounced, I think it was last week, was Adobe. They had given some indications that their AI, revenue is gaining traction. So the market is very sensitive to anything that's going to be a beneficiary of AI spending, and at the moment, really rewarding stocks that are exhibiting that. But the AI boom, as we've been discussing for a long time, really extends to a lot of industries, and there are a lot of different ways to play it. My thinking on the topic is, I tend to be cautious around valuation. I tend to be, focused on downside, and don't necessarily love chasing all the names that have already been rewarded for anticipated growth. But I do think across industries, there really are a lot of different ways to play it. And, we try to identify many of those in our model portfolios.
Yeah, I mean, it's a big part of what we're trying to, again, I just encourage people to go look at 76research.com, 76research.com, where we have 3 different model portfolios, including for people that want to look at not just, tech and growth, and tech and growth have, certainly been mega winners in the last 6 months, but diversification is a big part of any strategy, which is of course what we want to ensure that we have. So there's an inflation protection portfolio there, as well as another one just focused on income building, because at some point, hopefully, you're going to retire and you can get some income growth out of your portfolio. With all this in mind, though, let's get into what's been going on just within the tech sector because of Elon Musk and in his dispute, if you would, with Apple. So Apple Intelligence is, going to be a huge, I think, growth factor, if you would, Rob, in the future. With knowing that, and knowing that what's at stake for AI and specifically Apple Intelligence, kind of convenient, the way that worked out in terms of the name itself. What do you think that people should understand about the Elon Musk risk to Twitter, for example, which is, of course, publicly was bought by Elon, and I think the hope is that he will publicly trade it again at some point, right? That's the goal. We'll see whether that materializes. But what is the risk for him as a company? He doesn't want to have a lot to do with the AI that Apple's coming forward with. He's got his own plan.
Yep. It's always interesting to look at things through the lens of Elon Musk. He always has a very interesting angle on any development. But specifically with Apple, he came out after the Apple Intelligence announcement and was harshly criticizing the fact that they were partnering with OpenAI and kind of outsourcing their artificial intelligence engine. And Elon was critical of them for not being able to develop that internally. But what he really highlighted was, I think he made a comment along the lines of, he won't let Twitter employees have Apple devices in the future because the concern is there'll be the potential security risks in that those Apple devices will be sharing information with OpenAI, and that opens up, I guess, his corporate data potentially to, it puts it in under the auspices of OpenAI, which he clearly doesn't trust. Now, the context of this is, I think he's in a dispute with OpenAI, so he has beef with the founders there and the people running that. So there's a little bit of a kind of a personal or commercial competition or rivalry there. But it's interesting that that Apple Intelligence, one of the things that others have also criticized them for is the fact that really this is the first time that Apple is allowing a third party into the technology, be like at a layer that's below what you could like the App Store, right? So Apple is this platform, and it's a very closed system, and it's very safe and secure and isolated. And now you've got this third party OpenAI that's going to be the engine of artificial intelligence computations. So what Apple has said is that, and it's pretty interesting, and it goes back to what we were talking about with Nvidia the other day. What's happening with Apple Intelligence is, for the first time, these artificial intelligence activities are going to be that used to be on your phone. And for example, you know how your iPhone is able to identify people in your photos? That's
Right.
like sort of a basic form of AI. They're really kind of having much more sophisticated applications planned. And in order to accommodate that, it has to be done at the data center. So
Okay.
the information is going to be sent to the data center outside your phone. So now it's sort of at risk into what they call this private cloud, into a private cloud. And in some cases, it'll be partnering with OpenAI to find the answers to the queries or the other, whatever tasks that the user is asking the phone to do. And that's sort of where the vulnerability, Elon is saying the vulnerability exists with this exposure to OpenAI. Apple's saying they figured it out and they have a completely secure end-to-end solution where even though your personal data is going to the data center, it's still going to be completely protected.
Yeah, that's an interesting point. I mean, staying on this theme, if you would, of Elon Musk and big tech, I'm blown away by what's happening, because we look at the environment we're in, and you have increasingly a lot of regulation. You and I have talked about this before, don't mess with Texas kind of thing. A lot of regulation. You have an environment that is really about making sure that ESG and DEI requirements are being serviced, if you would, at sometimes, especially when it comes to some stocks like Disney, right, or others, it gets serviced ahead of the actual ability of the company to make profits. And Elon's like, which is kind of ironic and kind of funny, because you think about what he's created, right? And they don't give him any credit for the fact that he's got this really ESG friendly Tesla company. Instead, he's like, I don't want to deal with this ESG, this DEI nonsense. I just want to make these cars and run a good and efficient business. So he's kind of thumbing his nose at everything. And this includes, by the way, even just the Delaware courts. And why is this important? I mean, it's very important to understand, I think, the role that the Delaware courts have historically played. I mean, this is something that people don't really often really think about, but Delaware is the be all end all as far as businesses are concerned. I mean, Delaware is kind of the whole show, and everybody incorporates in Delaware. And Elon's like, I don't think I like Delaware very much right now, because he had an agreement in place with shareholders that he was going to get paid a certain amount of money. It was like massive, right? Something like $40 billion if he met certain metrics. And he didn't take a salary, but he said, here's the deal. Like, if I meet these metrics, I want to get paid. And the shareholders ratified that agreement twice. And yet you had some law firm with some guy who had like 8 shares in Tesla coming forward and saying, you know what? We don't think this is fair. So forget the fact that the board allowed this twice. We don't think this is fair. And so the Delaware courts sided with the law firm. Incidentally, they were willing to give the law firm, I think the law firm was asking for like $10 billion in compensation, which is wild because they didn't even, they didn't create the company. They just sued it. And Elon said, you know what? I'm out of here. I'm going to Texas. And you look at what's going on in Texas. You've got the TXSE starting up, Rob, and I think there's a good chance now that more companies will follow Elon's lead. What's your take on Tesla, Delaware, and the future of, frankly, New York City as the financial capital of the world?
Yep. Well, maybe it'll be Dallas next. It's really interesting.
It might be.
In the context of the Texas Stock Exchange, that comes in as part of this broader trend of Texas actually positioning itself to compete with Delaware as a place for businesses to be incorporated. So just the context here, as you mentioned, it's something like 2/3 of all Fortune 500 companies are incorporated in Delaware. And, there's multiple reasons for that. But one of the main reasons is that in Delaware, they have these specialized business courts called the Delaware Chancery Court. Mm-hmm. And actually, at the early part of my career, when I used to do merger arbitrage, I spent a lot of time kind of actually in Delaware sometimes, but kind of like involved in these merger situations because they were always adjudicated in Delaware Chancery Court. And it has a historical reputation of being very shareholder friendly. But it's also a place where all of these complex commercial disputes can be adjudicated, by judges and not by juries. So corporations like that because there's predictability and there's precedence, and it's not like jackpot justice, which you might find in these other states where some jury can, right? So Texas has actually been addressing this though. Last year they passed a law, the state legislature passed a law to create their own specialized business courts that would basically be similar to the Delaware Chancery Courts. Those are expected to go into effect in September of this year. And I think another interesting opportunity for Texas, Bill Barr late last year, in November of last year, wrote, former Attorney General, with another attorney, they co-authored a piece that made it into the Wall Street Journal, talking about how the Delaware Chancery Courts, the Delaware courts in general, their stance towards ESG was actually an existential risk for Delaware, because this is a little bit, it's a little bit arcane, but basically what the courts have come through various decisions, they've come to embrace the idea that ESG is a form of risk management, as opposed to what I tend, and that's always how the ESG movement portrays itself, right? Like, right. I view ESG as kind of a political movement, a political ideology that seeks to, kind of impose itself on companies. But the way it does that is by saying, no, this is a form of risk management, that this is actually protecting shareholder interests. So they package it as this is, as you have to do this because otherwise you're going to get lawsuits, or you don't want to have, and to a certain extent, right? You don't want to have an oil spill, and you don't want to be sued because you had an oil spill. But then you can take it to the extreme, which is where it's gotten these days. And so it's no longer about protecting your company from risk to shareholders. It's more about a political ideology that has kind of gotten out of control. I mean, I think Larry Fink from BlackRock, who championed this so early on, he's said this as well. I mean, he's interestingly one of the backers too at TXSE. And I think that a lot of the community that originally thought, oh, isn't this a great idea? Because they thought you could marry sort of markets with some appreciation for the world in which we live, et cetera. But unfortunately, that appreciation became very political and very opportunistic. And suddenly you're not making the money you should. The profits aren't there to support the politicization, if you would, of Wall Street. Yep. And, specifically in Delaware, what people are concerned about and what Bill Barr flagged is that there's this idea that's called the Caremark Doctrine. It's based on precedent. And it's the idea that not only are companies allowed to prioritize ESG objectives, they're almost obligated to, and it's being kind of packaged like in the interests of investors and shareholders. So now it's creating a liability for companies incorporated in Delaware who could potentially be sued for failures by company directors or officers to abide by ESG policies. So
Wow.
that's this opportunity, I think, that Texas has where, as a, here originally people were questioning, is ESG even permitted under concepts of fiduciary obligation or shareholder interest? And now it's evolving to ESG is required and there's liability if you don't pursue ESG policies. So yeah. I mean,
so it's like onerous. It's really, we've talked about it, Rob and I talk every day and we talk about a lot of these things at length. It's partly why we're actually here having our daily conversation with all, around some of these big topics. We want to have that with you. And I'm going to get to some of your questions and comments momentarily. We got a big tune in. So it's exciting. I think people are very much, interested in some of these tech issues and tech opportunities right now, which is important. But, Rob, it's just unbelievable how much the ESG, DEI, and I think, they probably, I'm going to give them the benefit of the doubt and say it came from a good place. It's just that the minute you get some politicians involved, and believe me, that's exactly what was recognized, it turns to this kind of woke capitalism. Vivek really, he did a great job. He coined the expression effectively with that book, Woke Capitalism. And it's something that you and I have talked about in depth for years. It's just taken over everything. But what I love, and this is about, sort of the foundation of who we are as a country, and we're both pretty patriotic, hence the name 76research.com. What I love is that there's a response, right? For every crazy wackadoo thing that comes out of the DEI ESG craze and the non-profit, non-market centered ideology there, you've got to counter. And this is what Texas is doing right now. Bill Barr laid it out a year ago in the Wall Street Journal op-ed that you're referring to. And I think that, somebody smart is like, wait a second, we need to do something different. We need the antithesis of this, or not even the antithesis. We just need a normal environment for which companies can go public and access the capital markets, because you can't shut off half the country because they can't abide by your rules.
Yep. And I think, when you put this in the context of the Texas stock, all the pieces are starting to come together. And I think Dallas is really making, and Texas in general is really making a big run for becoming a major financial capital. And I think they've got a good shot. The problem is
too. By the way, hey, you had me at taxes, right? 0% income tax in Texas. I wish New Hampshire had figured this out first. But look, Texas has already got a firm, solid footing. I'm from New Hampshire. That's why I say that, live free or die, right? I say that also because there's 0% income tax as well. So New Hampshire has it going on. If we could just keep all those people from Massachusetts moving up. Sorry, that's an old rivalry. But look, Texas is awesome. I love Texas. I love people from Texas. I love the strength and character, the bigness of Texas overall, and the independence of Texas. And I love what they're doing here, because why should New York get it all, right? Look, Florida's figured it out too. Hey, maybe if we offer a better living scenario for people, and look, the cost of living is going up there significantly, as it is everywhere, but people figured out, if I don't have to work in New York, if I don't have to live in the Northeast, I don't need to, right? If I don't have to be here, maybe there's an opportunity. And so you've got financial centers opening up. Carl Icahn took his whole shop right down to Miami because it's a nicer quality of life and there's no taxes. And so Texas is now, really competitive on this front. And I think they have the infrastructure to do it.
Yep. And they're developing it, right? It's going to be a little bit it's going to be difficult to break that, New York Stock Exchange, NASDAQ duopoly. It's going to be difficult to break that Delaware, 2/3 of all major, Fortune 500 company, right? These are kind of entrenched monopolies, but I think they're off to a good start, and it's probably healthy to have this competition, both for the stock exchange and for the Delaware court system.
Yeah, no, for sure. No, and I love seeing it. And I get a kick out of Elon sort of championing all of this, right? He's out there saying, this doesn't work, let's fix it. So go Texas, keep up the hard work. I think that it makes a ton of sense. We were talking about companies that have gotten too woke for their own good. And with that in mind, I mean, one that I think of and one that I've certainly reported on a lot would be, if you would, Bud Light. I mean, Bud Light, Rob, has been such the poster child, right, for what not to do. And I'm going to see if I can add you back into the conversation here. See, I'm not doing something right here because my shots are getting this. This is live. You guys are really getting to see how the sausage is made. But Rob, when I think about Bud Light and what it's been through, and I think we have a good chart that we can show you guys. I want to do that because this is a stock that I remember, and this is in part why I wanted to found and start 76 Research with you. I remember, oops, that's definitely not the right shot. I remember when it first hit. It was in like April of last year, and Dylan Mulvaney was suddenly their spokesperson, and it kind of took off as a viral sensation. It coincided with the head of marketing for Bud Light saying some things on a podcast about, how they had to diversify away from their fratty base. Well, that didn't sit so well with the fratty base. This sort of wokeism, I think people realized that it had taken over in a way that was not actually smart. And Rob, you at the time, you and I were talking, and you were like, that's it. You know what? I'm buying Molson Coors because this is you can drink Coors Light. It's a very tradable, not as easy as, say, the Delaware court system versus Texas, right? But this is sort of a tradable option here in that Bud Light, Coors Light, hey, sort of same product, different brand without all the stink around it. And you were spot on. And I told some of the viewers, I don't ever like to tell them specifically how they should trade, but I did say, I have a friend who's buying Molson Coors in this. And then, by the way, you sold it. And I told them when you sold it too. It was kind of an obvious play, but not everybody did it. What do you think? Here we are 1 year later.
Yep.
And you got a stock that, you got out of Molson Coors, it's down, right? So clearly people aren't drinking as much beer in general, I guess. Bud Light can't recover, and I actually feel bad. I feel bad for the workers. I feel bad for a lot of people because I think that, it just was not very smart.
Yeah, it's really just an interesting case study. So I think that whole incident started, as you pointed out, it was like something like April 1st of last year when the Dylan thing dropped. And I think around like April 12th, you texted me a New York Post article. And this was actually at the time we were kind of brainstorming 76 Research or hatching our plans. And I think the whole dynamic there really contributed to our thought process. There was a New York Post article and it really signaled like, hey, like there's going to be a revolt here. The customers there's a boycott. And I went online at that point and I said, okay, what is everyone saying about this? What is everyone on Wall Street saying about this? What are the analysts saying? And they weren't saying anything. It was like as if it wasn't happening. And I think to me that signaled, okay, there's a blind spot here because, no one's talking about it. It's too politically sensitive or too politically incorrect. And, no one's writing about it and the stocks haven't really moved. So I saw an opportunity there. One thing I guess I learned in college being one of those fratty guys that the Bud Light executive was sort of poking fun at was that yes, Coors Light is a perfectly that Coors Light is
you knew that Coors Light was better, huh?
Yeah, one thing I did to be honest, I do prefer it, but it's like look, there's not a heck. One thing about the beer market is that loyalty is not as high as it is maybe with other consumer products like tobacco. Actually, notoriously, cigarettes have very sticky brand loyal customers, but beer drinkers aren't necessarily that loyal, and they move around. And look, Coors Light is a perfectly good substitute for Bud Light, if not better. And the thing that was interesting about Molson Coors is that really like they made a lot of their money specifically off of Coors Light. So there was going to be a market share shift. I felt it wasn't priced in. I jumped on it. But I think, in terms of why that was more of a trade rather than a long-term investment, the beer market itself it isn't necessarily in my personal opinion, the most interesting or attractive, like structural part of the consumer landscape.
Okay.
There's just sort of this longer term demographic, kind of issue where the younger people are drinking less beer, moving more towards spirits and frankly to cannabis. So beer growth is not, the long-term outlook for beer, no matter whether it's Bud Light or Coors Light or whatever, is not great.
And so that's contributing as we look at the downside, right, in the stocks right now, because people are opting for different things, whether it be wine or spritzers or, there's more optionality. It's not as
there's some innovation in the category.
Yeah. But not that I'm going to cut this woman any slack at all. I mean, I think that she disrespected her core customer, which is just fundamentally the big part of the problem here. And the company didn't respond to it fast enough. They didn't understand essentially what was going on. The Wall Street community was terrified, as you pointed out, by everything that was happening, and they were afraid to say boo. But what she was perhaps trying to do is diversify the customer base. I mean, her mistake was that you don't diversify by alienating, the very fundamental core group that brought you to the dance right in the first place. And so that was, I think the biggest mistake. And it's like, look, be careful what you say. And I think she was someone who sort of symbolized the wokeism that you're getting from the left that's taken over Wall Street, as we were just saying right now with all this DEI stuff. So there's more out there. There's more opportunity.
Was she trying to diversify, or was she pushing her own personal?
It's a good question. I'm being nice. Yeah. And I'm just trying to I try and rationalize these things. Like what could possibly, because I understand you wanting to expand your market, but do you really want to kill what you got? You are the number one beer brand in the world. Like, why would you be so stupid? Because politics, maybe they don't make enough money. They're more concerned about their political agenda than actually growing their product.
But look how it went down, right? You had someone who perhaps had a political motivation or a political agenda that she wanted to promote, using the company as sort of a basis to do it. And then she wasn't stopped. No one said no, because everyone's sort of stopped in their tracks, or afraid to say no, or afraid that they'll be called a name if they say, look, our customers aren't going to react.
It's funny. They got a huge award, the marketing department at Cannes. It was they have big awards. It's not just the Cannes Film Festival. They've got the Cannes Marketing Awards, and it's the marketing award of the year. And they got a marketing award after all that. And I'm like, wow, you guys, you're about marketing, right? If you're about marketing, aren't you actually about expanding a customer base? No. They're clearly not. You get the award because you just downsized the company, and it's now struggling with, an environment. I don't know, Rob, if they're ever going to recover. And I say that because, here, as we look at this stock chart right here, let me see if I can pull it up for people. It's done. Right? I don't know what it's going to take. It may just be fundamentally that this company has seen its day.
Yeah. And I guess a few months ago, Trump had sort of forgiven them, or had, because they are still a large.
Well, yeah, they sponsor UFC, right? And his buddy runs the fighting championship thing. I believe they've got a big deal, right?
Yeah, and it's still
so funny how those all work
in the U.S. And look,
Kid Rock too, but I'm betting you anything that's a mega sponsorship deal. Maybe Kid Rock has a deal with UFC, and Dana's forgiven Bud Light, and so Kid Rock and Trump and everybody. Look, money makes the world go round, I guess. And so Kid Rock has made a decision to forgive them, as has Dana, for a $150 million sponsorship.
Yep. And the investment lessons are kind of interesting too. You want to be careful here, because actually what Molson Coors, reported in their most recent quarter is that, there is this sort of shift in market share, this reversion, and there was like this overstocking problem. So that's why the stock has been so weak in the past few weeks or months.
Yeah.
It kind of bit them in the behind, so to speak, when they, this market share volatility. So, as investors, I would just caution people, like when these kind of political angles do surface within the market,
Yeah, don't be afraid to
you got to be
bail.
careful. Yeah.
I mean, I guess that was, the moral of the story is Bud Light is not, if you were in shares of Bud, and by the way, it's a hugely diversified conglomerate, merger between a Brazilian company and a Belgian beer company. And they distribute a ton of beers, any beer you can really think of. A lot of people have actually moved towards craft beers, and they're saying, okay, go local, et cetera. A lot of those, by the way, have gotten scooped up too. So it's a very diversified company with a lot of different beer brands. But I think if they're smart, they're going to start diversifying into more than just, as you pointed out, beer, because the market for drinks is growing in new and different ways. Getting back to like us and the model portfolios, I just thought it was worth talking about because we've seen a lot of strength recently. In fact, in one particular portfolio, there was so much strength in one particular stock, in one particular company, in part because of the need for natural resources that you and I spotted and told people about early on. And we love that company and we encourage people to stay in that company. But it gave us the opportunity to go out and say, okay, it's become such a big percentage of your portfolio now that you might want to think about other things. And I think it's important for people to know that when we say it's like 10 to 15 stocks, hopefully those stocks are going up in value and we like them even when they go up. But we, in some cases like this, say, okay, maybe it's an opportunity now to go in on this other company because you don't want, I think it's important for people to understand, especially in light of Nvidia, bringing it back home, right, to tech and big tech and Nvidia. People don't always realize, by the way, if you're in the S&P 500, you're in Nvidia. And so the S&P isn't going up as much as Nvidia, but you do have some exposure there. So understanding diversification, I think, is really relevant. Walk us through that in terms of your own philosophy as a fund manager for the last 20 some odd years and how we implement it at 76.
Yeah, I think what's interesting, when we look at the last 30 days in particular markets, and this is a theme that's recurred, over the decades, where, you have these rallies in technology and, growth stocks, and they really kind of drive returns. And it becomes to some extent self-fulfilling where, portfolio managers sort of say, wow, I don't own Nvidia and that's killing my performance. I need to go buy it. And so it kind of sends those stocks up even higher. We've had a very, very significant divergence between growth and other parts of the market, or just between like the big market cap leaders in the market versus smaller cap names. So I would my suggestion is that investors should, remember that there's more to the stock market than Nvidia. There's more to the stock market than AI, even as important as a theme it is. And there's a lot of opportunities there are a lot of opportunities elsewhere. And, that's also, part of what we're doing within the model portfolios is finding, good balanced opportunities where the fundamentals and the growth outlook are durable and strong, but the valuation is not getting overextended as it potentially is with some of these large cap tech names. And where you're just not as complete, your portfolio won't be as completely reliant on a handful of high multiple, high growth stocks and sort of broader market sentiment. So, yeah.
I mean, no, but it's so important to think of that. I mean, diversification being critical. I mean, look, you can go and buy the S&P, and the S&P is the S&P. I mean, I think what we're trying to do is something more direct and articulated, right? Because if you're in the inflation protection portfolio, the idea there is that you're basically, and this is going to lead me to the US dollar, but there's fear and concern that the US dollar over time is going to be increasingly challenged because of inflation, right? I mean, you have only to look at the inflation we're dealing with right now, which is rather significant and nowhere near the inflation that you would need in terms of wages to keep up with things, right? So think about it. If you're going to retire 5 years from now, and you're like, okay, I just want to make sure that whatever I think I have to retire on is worth that. Hopefully some, because of the growth generated from the equity portfolio, but also you need to make sure that those companies are keeping pace with inflation. It's not just about growth, it's getting growth on top of the inflationary measures, which people don't always think about.
Yep. You know, I don't think a lot of people in the investment business will go and say you should go buy the S&P 500, or other than Warren Buffett, that you should go buy the S&P 500, or that you should go buy the NASDAQ triple Qs. The active management industry doesn't really make money by giving that advice.
Right.
But I do think that is sound advice. If you're going to be invested in the market, having a large amount of passive exposure to the S&P, to the NASDAQ, that's like a great starting point and a great sort of foundation, and that should be a large allocation for your equity portfolio. What we're doing though with the model portfolios is offering more specific ideas that aren't just replicating the exposure you're already going to have.
Right.
If you buy the S&P or if you buy the NASDAQ,
Yeah.
looking at more idiosyncratic opportunities that might be underrepresented with those passive approaches.
I'm actually putting this in the question and answer thing right on the live chat for people to see, because it's relevant. If you're watching this and you're thinking about, okay, what is my opportunity right now? Just getting to some of the comments. And this is actually airing not just on 76 Research live here on YouTube, but actually on my Facebook channel as well. So I'm looking at, Terry, it's good to have you here. Raymond as well, Brian. And you guys are definitely tuned into a lot of the DEI stuff that we've been discussing. But I just want to throw this out there. If you do have questions and comments, we're live on YouTube, we're live on Facebook right now. 76 Research, at 76 Research is the handle. And Kevin, welcome. Good to have you here. I would just say to everyone, feel free to jump in with any questions. I want to get to something that Peace of Mind on our YouTube channel at 76 Research brought up most recently, and that was, what exactly is the future of the US dollar? How do we think about investing with our US dollars in light of what Saudi Arabia just did? So if people haven't been following this, Saudi Arabia is kind of like, gee, we don't want to have all this exposure to the US. And I wonder, even though Saudi is an ally, if they're looking at what's happened, say, with Russia, and the ability of the U.S. to say, we're cutting you off, right? We're not gonna take any trades in nat gas, and rubles are no longer exchangeable here. Is this what other countries are worried about right now? And what does that mean for the dollar safety, and for the hegemony of the U.S.?
Yeah, it's a really fascinating topic. So there was this story from last week, I believe, that the Saudis were ditching an agreement with the U.S. That required them to conduct all business in dollars. Having looked into that, it's not totally clear to me if there wasn't. There's a lot of questions around like kind of the veracity of that story, or what really happened, whether there was an agreement at all. So to me, it's a little bit ambiguous what actually occurred. But I think
let's not split hairs on that. Let's not the facts get in the way of a good story. No, I'm teasing, but. Even, all that aside for a second, right?
Yep.
We're looking at central banks, and you and I were just looking at a chart of central banks all over the world. Central banks all over the world saying, you know what? We are going to diversify out of the US dollar. I mean, let me see if I can show people this here. Here we go. Okay. Haha. Trish got a chart up. So these are official holdings in official reserve assets. And if you look, I want to say this is around 2010, central banks around the world started increasing what they were diversifying. They were diversifying, I should say, into gold. Why is that?
Well, yeah, I guess that was, around the financial crisis. When you go back to the sort of the late 90s, the sort of the prevailing perspective, and then we see it as all the way down through the financial crisis. The prevailing perspective was that gold was sort of, the so-called barbarous relic, and it was a silly asset and low tech, and, central banks, everyone was was sort of getting rid of it. And now after the financial crisis, I guess that was really the catalyst. Say the mindset is
That's
completely
interesting.
changed.
That's interesting that it would have been the 2008, right? Because again, I'm looking at, I don't have the precise year there, but gosh, Rob, it looks like around 2008, it was at the low. So that must have been the year. And then all of a sudden, boom, 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 boom. I mean, we're not back to where we were, say, look at 1965, right?
Well, that was during the gold standard, though.
You're right.
So, yeah.
You're right.
So they're accumulating gold, and I think they'll keep accumulating gold. I mentioned the Saudi de-dollarization story. Whether or not whatever actually happened there is a little bit irrelevant, because the bigger picture is, there is this push among emerging market countries, among the BRICS, to figure out a way to get out of the, American financial hegemonic problem, right? So I think it's very interesting. A couple of weeks ago, there was a BRICS meeting that took place in Russia. Everybody attended, obviously Brazil, China, India attended, right? So, people were talking about, is our policy in Ukraine going to drive Russia and China together? India is now, tight with them as well. And who else sent a delegation? The Saudis, right? So Saudi Arabia is now getting closer to the BRICS. So I look at this as a bit of a backfire in terms of what our whole Ukraine policy was. If you rewind a couple of years, we would have expected Russia to be marginalized, and that our sanctions were going to just kind of make them a pariah within the international community. Now, 2 weeks ago, they're hosting a BRICS summit. The Saudis are going. All of these countries are trying to figure out workarounds, trying to figure out how do they develop monetary, frameworks and trading systems that aren't reliant on the dollar, where they don't have to put where they don't have to hold as their reserves U.S. treasuries that are, could either be frozen or can just become less valuable as we fail to solve our entitlement problem, another topic we've discussed.
Yeah.
So
that brings us to, not to step on you, but I want to make sure that Peace of Mind gets his questions answered too, because, the ways to diversify include gold, obviously, but also maybe digital currencies. I mean, I think that's kind of a dream, if you would, of some of these EM places, emerging market countries, and some have sort of tried it, but it's also tricky in that comes with its own set of challenges. I mean, I think the advantage you have, and by the way, I like Bitcoin. I remark on how I was the first reporter to actually ever cover. It wasn't that long ago. It was the first time back in 2012 that they ever took Bitcoin as legal tender. And there was a great kid named Charlie Shrem, who actually wound up getting put in prison by the feds because they really, really didn't like Bitcoin. Like back in the day, there's one guy, what was it, Dread Pirate Roberts? Some of you guys that are watching may know him. I remember talking to his mom because he wound up going to prison. He's still in prison, by the way, because he was using Bitcoin as a way of transacting on the deep dark web, so to speak. He actually wasn't like buying or selling illicit substances, but people were using Bitcoin to do so. And somehow he was like a middleman who got trapped up in that. I mean, this was back in 2012 when Bitcoin was going for basically $100 a coin. And nobody knew what to think about it. And I was like, this is amazing. So I was there the first time. Charlie Shrem, who owned the bar in New York City, young guy in his early 20s, was like, is this not cool? And I'm like, this is super cool. It was like, Bitcoin for beers, just to bring it full circle, right? Back to Bud Light. But this is Bitcoin for beers. You could actually use this as legal tender. And now it's increasingly become that way, Rob. And so people say, wait a second, is this really the future? I mean, what do you think as we look, I don't know, 20 years out? Bitcoin is certainly, I mean, it's no longer $100 Bitcoin. I don't know where we are right now. What is it, like 40K?
I don't know.
Somewhere in that. I'll find out. Yeah. I'll find out. But I mean, look, and it's become so mainstream, if you would,
Right. And they had the ETF conversion, which we wrote about a bit in the 76 report. And look, my personal view on Bitcoin, I do own, I got into Bitcoin via when the ETFs were or when they were back when the GBTC was a trust and were trading at a big discount and Bitcoin was down and out going back a couple of years. Look, it's very uncertain. It's very volatile. I do have a little bit of exposure personally to it, because
what am I talking about, by the way? You guys are, the viewers are going to get mad. Let me just be very clear. 64,000. Okay. $64,744.
And that's held in there.
I should have loaded up back in 2012. Right. What was I thinking? Okay, keep going.
Yeah. No, look, Bitcoin, Jamie Dimon called it a pet rock. Look, I think it's more than a pet rock at this point. I think it's widely owned. It's institutionally owned. Who knows where it's headed next. There is a case that it's going to become kind of the new, it's digital gold. Everything will standardize around it. And you fast forward 10 years, Bitcoin's going to be worth even more, perhaps considerably more. And it's going to play a role in this new kind of global monetary architecture. I think technology and crypto and blockchain technology is part of what these BRICS countries are really working towards in terms of figuring out, and gold as well, because there's discussion that gold will, whatever solution, technological solution.
You can have a kind of digital gold, if you would. Or
that it'll be some sort of mechanism that's gold backed. So, when you think about both Bitcoin and gold in an environment where most of the world's population is trying to extricate itself from American financial dominance or G7 financial dominance, just structurally, it's like an interesting trend. These BRICS countries are like half the world's population. Their growth rate is significantly higher than the G7. The G7 real growth rate something like 1%, and the BRICS countries are like 3.5%. So, not to be negative towards the U.S., but there's a lot of people and a lot of economic growth and a lot of advancement occurring in these economies, and they don't like being abused. And we've sort of driven them to the point where they're kind of teaming up, even despite all their historical differences. You think about India and China; they're teaming up and saying, "We want our own system. We want some respect here." So
yeah, look, and those are things will have to be confronted. One thing that we haven't talked about is, if you look out now and you say what's going to happen election wise, and as we get closer to the election, we'll talk about it. Not so much in a political way, but I think it's worth sort of understanding from an investing perspective. And one of the things that will come up is the more, I remember Lou Dobbs, gosh, I think he still hasn't forgiven me because I once said, well, these are kind of isolationist style policies about Donald Trump on the global scale. And Lou lit into me. And this was during a commercial break. What do you mean isolationist? And I was like, well, you could look at America first. I think that Trump is isolationist, and I'll say that, sorry, Lou, in terms of saying, okay, is this good for the U.S., right? We don't need to be running around. And I'm not saying isolation is bad necessarily. I think that you need to, walk softly but carry a big stick. Make sure you got one HELL of a military that is ready, willing, and able to go and make sure you're firing on all cylinders. You need a little patriotism, right? In order for people to stand up for the country as well, because people have to be willing when the time comes. But simultaneously, you don't want to get yourself involved in everything because that comes with other headaches. But I think when it comes to tariffs and when it comes to trade, if Donald Trump is in charge, then actually some of these countries, like Russia and other emerging markets, are going to have to reckon with the fact that he's going to make decisions based on what's good for the U.S. And if it's not good for the U.S., he's going to use trade and tariffs to his advantage to influence the situation. So you look at Claudia Sheinbaum coming into Mexico, and she believes in porous borders. Hey, why? Yeah, you want to immigrate to the USA? That's not my problem. Well, he's going to go in and say, hey, Claudia, you know what? It is your problem. And I'm going to make sure it's your problem because I'm going to tariff you until there's no tomorrow. And by the way, those U.S. treasuries that you're holding, he may say, you're done. And if you're Claudia, if you're Mexico, or you're any country, anywhere, you might start thinking about, okay, it's not just Biden, right? And whatever happens to be sort of the whim of the quote unquote deep state and whatever battles they're going to fight, you're dealing with this whoever is in charge.
Yep. And I mean, look, the idea that Trump is isolationist, I think.
Oh, you're going to sound like Lou.
I'm going to sound.
Go ahead.
No, I think it's more that he doesn't want to get bogged down by these multilateral institutions, right? By NATO or by the United Nations. And of course, the countries that control those institutions or have a lot of influence over those institutions, they want us to be bogged down, right? They want us to be sort of to cede our sovereignty to their arrangements and their alliances. And Trump is saying, no, we're going to act in our own best interests. We're not going to disengage from the world. We're just going to interact with the world in a more kind of
U.S.-centric
unilateral way.
Yeah, I mean, it seems to me anyway to make sense, I guess. And, it does. I mean, I actually think his foreign policy, his economic policy, those policy spheres, if you would, they're absolutely outstanding. And I think that a lot of people are sort of realizing that, which is reflected in the polls, et cetera, when they look at such an inflationary environment as we're in right now. I mean, he had some good people with good ideas and a good team around, my former co-host being one of them there, Larry Kudlow, but just a lot of smart people thinking about the economy, thinking about foreign relations, even some of his advisors, even his informal advisors, Jack Keane, who was a 4-star general. I mean, just people who are thinking about this, I think, in really, really smart ways. So I think that his approach is a good one. I just think that as an investor, right, what is it that I'm thinking about? I think regardless of who is president, this trend is here to stay, and that you're going to continue to see emerging market countries diversify away from U.S. holdings and away from the U.S. dollar.
Yeah, I mean, I think they're doing everything they can to, and it's just in their interest to figure that out. And that's going to be a support for gold. Perhaps it'll be to some extent support for Bitcoin. Mm-hmm. But it's just rational for them to want to do that. And as those economies grow, they are going to become a bigger, when we fast forward 20 years into the future, the BRICS countries, the global South, whatever they like to call themselves, they're going to be more relevant as part of the global economy than they are. You
think
today.
so? I mean, because I'm not a big EM player. And by the way, I started my career. I know you started your career too in EM. I mean, I was at Goldman. We were trading sovereign debt for emerging market countries. But even all that said, I'm not like a big, and I don't think and you aren't either. And we don't have any sort of big EM focus going on right now. I mean, maybe that's a really long-term play. Maybe there's some things that are starting to look attractive, but that's been kind of dead money for a while.
No, I'm not saying EM stocks are the place to be, because but it's just those economies. I was looking 25 years ago in today's dollars, the Chinese economy I think was $1 trillion, and now it's 18. So look, they're coming off of a low base. They have the technology, they have the hard, the willingness
work
to work.
ethic. Mm-hmm.
They're in a lot of these countries, not China, but other countries. There's population growth. Contrast it with the G7, contrast it with Europe, contrast it with Japan. The United States is the growthiest of the G7. So it's just sort of the demographic, realities. And the point being, those economies, their stock markets might not outperform, but those economies will grow and grow, and their GDPs will grow, and there'll be more opportunity for them to kind of try to figure out an alternative monetary framework that's not completely dependent on the U.S.
When you think about that global growth scenario, and certainly the U.S. has been the engine of that, I guess one of the things that we'll want to try to protect is our ability to have those markets, right? Because you don't want to necessarily outsource everything to, that's been sort of these are the trade disputes, right, that Trump was having, because it's like, and I love the fact that like suddenly people were talking about the trade deficit, which just cracked me up because that was never in the news. And he was like, look at the trade deficit. But it's a relevant thing to think about. I know that everybody's like, oh yeah, but they discount it because they're thinking, well, we trade in different ways. Nonetheless, the majority of the working class in America is very entrenched in manufacturing, which means the trade deficit actually does matter, right? And so as we fast forward and China grows and India grows and plenty of other emerging markets grow as economies, I guess protecting our ability to really be sort of the center that's selling, hopefully, to them and creating stuff that will go to those markets will be relevant.
I mean, there is a flip. I was actually speaking to a friend of mine who's also an investor. And, the flip side is if we aren't the reserve currency as much anymore, and there is this sort of migration away from the dollar, that could actually be beneficial for U.S. exports and U.S. manufacturing. Mm-hmm. So it's not all, a completely bleak situation. Things have a way of balancing and correcting.
Mm-hmm. Well, that's all good to hear. Again, I just want to thank everybody. I'm looking at this might be our most highly rated live show yet. I'm going to be over on the Trish Regan show momentarily coming up at the top of the 5 o'clock hour. So everybody go over there, and I'll continue the conversation with you there. But for my super wonky friends and viewers, I hope that, if nothing else, like you can get some takeaway here from some big picture ideas. I encourage everybody to go and subscribe to the 76 Report. Go to 76research.com or the 76 Report. We did actually, Rob and I put the handle, the URL for the model portfolios in the show notes. So go look at the show notes. That's all there for you if you're interested in getting a model portfolio. Here's the deal. Like, we'll pick the stocks, but you're responsible for your own portfolio, right? So we're not managing your money. This is really just our sense and sensibility about what the opportunities are right now out there. And I do encourage everybody always, right, to have sort of their own compass on all of that. But, nothing's perfect, but we've had a very, very good track record thus far. So I'm proud of that. And, hopefully it continues, but really quite something to see here with Nvidia this week. Just incredible.
Yep. So I think my son was onto something when I mentioned, when he was telling me to chase the upside, and now I'm going to have even more.
Yeah. To still chase it. Like not, if, it's funny. My son, I remember him saying, "You got to buy Roblox, Mom. You got to buy Roblox IPO." And then he called his grandmother and said, "Mom, Mimi actually is what he calls her. Make sure you buy Roblox during the IPO." So sure enough, she did. And then he calls her, I don't know, a couple months later, he's like, "Make sure you sell it because we're so over Roblox. The kids are not playing Roblox anymore." And, he timed it right. I was going to say, okay, you're really like tuned in, entrenched in this stuff in ways that I couldn't possibly imagine. But I guess other than listen, Rob and I at least have young kids who are playing all this stuff. So, we can spring some ideas off of them. But no, it's important to kind of be on top of things. We don't believe in buying and selling and rushing in and out. Although my mom, taking his advice, did well on that trade. I do think that setting yourself up for long-term growth is really important. And when we say long-term, it doesn't have to be forever, guys, right? Like if you're retiring in 3 years, you still need to be able to live off of those assets, hopefully in your retirement, which is why Income Builder is something we encourage you to take a look at. But again, I just want to thank everybody for tuning in. Rob, always a pleasure to talk to you. We'll be putting out some of these clips, guys, in chunks. So if you have a big interest in NVIDIA, you'll get the NVIDIA stuff. You can go back and rewatch it. Make sure that you subscribe to the channel. Make sure you hit the like button, that you hit the bell on YouTube so that you know when we are here. Every day we have a live show and every day we're uploading content. Go over to 76 Research. If nothing else, make sure you sign up for the free stuff, and Rob and I will see you next week. Thank you.